Picture now, Asian markets were mixed across the board this morning, and during the early hours, the People's Bank of China pegged the yuan to a level slightly lower than 7 against the US dollar. This boded well for confidence and fears that Chinese authorities may be willing to engage in a currency war with the United States. Over in Japan, investors remained cautious about equities, with the Nikkei closing down around 0.35%. That ended the day then at 20,516 points. The Hang Seng did manage some good numbers there, although Hong Kong protesters have been warned by China that they should not test their patience as they fight against any increase in mainland China's influence on their political freedoms. Although this was the sentiment, the market did end a little bit higher there, 26,016 points. The Hang Seng index managing to gain around 0.1% there. Now, China continued to feel the heat of an uncertain US-China trade war outcome. The Shanghai Composite ending 0.33% lower today, 2,768 points by close of trade. Let's head on over to the United States now, where stocks had a better day yesterday, closing in positive territory. Now, earlier, fears of a currency war were allayed when China intervened to keep the yuan currency below 7 against the US dollar. This after not intervening the day before yesterday when the yuan pierced through 7, and market players thought China may use a devalued currency as a lever for war in its trade dispute with the United States. Now, the Dow Jones Industrial Average rose 1.2% to 26,029 points. The S&P 500 firming 1.3%. 2,882 points, while the tech-heavy Nasdaq ended 1.4% down as well, 7,833 points. Let's head on over now to how markets fared out in Europe as well. Then, of course, the sentiment has been around how that situation around pegging the yuan against the US dollar around 7 and what that actually means for trade. Well, it seems that the markets across the board have sensed a bit of stabilization in that news and how things are faring on that front. So it does mean that all of them are certainly higher across Europe on the main indices there in London, Germany, and in France. On the local front, around 0.2% better off as well for the JSE All Share. So a much better picture, although still firmly below that 56,000 point mark. Industrials doing well, and that's despite a fall of around 0.3% for Tencent out in Hong Kong. Naspers, of course, a big influencer when it comes to that trading, and now sitting at 71,494 points. The banking stocks not necessarily doing too well as the rand sits in that negative territory. Taking a look then at your resource counters and just seeing that some positivity continues to filter through here as well. The gold counter sitting at 2,497 points. Resources doing much better as well, with the rand sitting at around 13.95. But your commodity picture has been one of keen interest. Even the signs of gold hitting that 1,500 fine ounce mark a little earlier on today. That is the best mark for price of gold since 2013. So a 5-year peak for that price. Does it continue to head into that mark? Well, we'll find out, of course. It has been a safe haven for investors of late, considering what has happened with that China-US trade war, as things escalate then, using currencies now to perhaps devalue themselves. And this is the state of South Africa's currency. It was at around 14.91 against the US dollar when opening earlier today, but of course now getting to 13.85, so perhaps a slight betterment when it comes to that. But the overall picture is one that I will show you now when it comes to South Africa's rand, and it has weakened of late, particularly this month alone. Just this month, the rand has weakened around 3.3% against the US dollar, and a lot of that based on the trade scenario going on, of course, with China and the influence then of that on the market. And having nearly hit 15 rand just around the 5th of August then as well, 14.99 against that US dollar mark. A lot of the questions have been around what exactly this means for the US and China. How was South Africa going to be able to allay any fears? Let's remember that Moody's also came out with a warning yesterday saying that government's influence and government giving around 105 billion rand over 2 years to Eskom will not fix Eskom's problems. If anything, it will just help them to relay situations as they are right now and keep things as they are. So not necessarily too much movement there, but this is the state of the rand, a complete weakness across the board of over 3%. Let's discuss this graph now, and I am joined luckily in studio by Makwe Masilela from Makwe Fund Managers. That's not a pretty picture, Makwe.
Not at all, especially in such a short period of time.
Yeah, certainly just this month alone. What does this say then, you think, for things like the South African Reserve Bank and even the US Fed, who certainly didn't cut as much as perhaps some would have liked, particularly Donald Trump, but perhaps another cut is on the way, considering that US-China trade war will stifle progress?
Sure, by all means. Because South Africa is a net importer, this is supposed to be inflationary. And whereas out of those imports, I think the biggest chunk comes from oil. I think accounts for 40%. But I think we need to remember that, the minute the rand weakens does not automatically mean that all imports has to go up. Because some of these prices, you have just worked in a 3 months kind of a thing. So it's not like automatically prices will go up. The problem is, if it gets to stay like this forever, then definitely we'll start feeling it. And I think the Reserve Bank won't be too happy, especially after they've just cut interest rates last month or so. But in its nature, it's supposed to be inflationary, provided it lasts forever.
Look, certainly the sentiment has been around us also getting that warning from Moody's. They're the last ratings agency to still hold us above non-investment or investment grade, should I say. It is now at a time where you begin to worry. Their next scheduled review of South Africa is in November. That's Moody's. But they could just move at any point in time if things really look bad. Yeah,
and given that, remember, even in March when they were supposed to move, they didn't move, So yes, they can move if they have to. And so far, I think Moody's is like telling us, guys, that, since June, they've been indicating that they're not too happy with the situation. And now we've made even things worse by making sure that we give Eskom money. Maybe just check yesterday what happened with the the bond auction, the weekly one. The demand was not there. So that says something. And we issued more bonds yesterday because we had to use that money to bail out Eskom. But now it gets concerning that the demand is not there. So that tells you something, that international investors are not too happy. And we've seen that so far almost more than just under 5 billion has been out of the country compared to last year. So it shows you that people are not comfortable with our situation. But we just hope and pray that the likes of Moody's don't have to downgrade us. Because should that happen, then definitely there'll be lots of money leaving the country. Not because they don't like us, but because of their mandates, which don't allow them to invest in a junk country.
So you think we should do everything we can to try and maintain that rating?
We don't have much of a choice, and it's not a question of thinking. I mean, we're at a point that definitely we have to make sure that we get things done. And what's concerned is that we know what needs to be done. The question is, we're lacking the implementation. Busa, they've said it as well, that we're taking forever to make decisions. You check Saki as well, they're complaining. Nedbank as well, they've said it as well, that listen, we are seeing high defaults when it comes to our corporate and retail clients. And that's a very good indication that people are struggling if people start defaulting, So it's a point where we know what needs to be done. It's just a question of implementing all that.
All right, well, one sentiment that maintains this sort of graph as well has been BCI. That comes out today, falling there as well. Saki really saying that the sentiment in South Africa is not one that is conducive for growth.
By all means, and they're complaining about obvious things, and I don't know, Saki, I mean, ever since 94, we know that come to municipalities, come to state-owned enterprises, there's always been political appointments. I think they should come with another reason. It's a question of maybe we need to get people who know what they're doing, and I think as well we have to factor in that even the global economic condition has not been doing okay. A simple question, why are all these central banks reducing interest rates, the US, Russia, everyone? It's because they're all concerned about the global economic outlook. So it's not only us here. Yes, we've got our own doings as well, but for sure, if maybe we can do what we can do within ourselves, then probably we should be able to be resilient, not necessarily to shoot out the lights.
All right, let's very quickly talk then about company news having come out today. The big one, Glencore, coming out with a set of earnings, a big fall there when it comes to their earnings picture. Not necessarily the big conglomerate it used to be.
By all means, and why? Demand is not there. Why? You check some of their commodities, coal prices have been going down, cobalt prices have been going down. I think since April they've been down last year by almost 70%. And unfortunately, compared to their rivals, they missed out on the likes of the rally that we've seen, the likes of iron ore. So it's just so unfortunate for them. But totally, you can see that the global economic conditions are not conducive, not just for us as a country, but everyone else, because that's a commodity trader. So demand is not there. Why? Because the economies are not growing.
Are you worried then perhaps that as a conglomerate, that as Glencore is, that if it struggles across the board as it currently has, that mining certainly then is continually in the doldrums? We hoped that there would be some sort of gain and some sort of good picture. We've seen it from the likes of Anglos, but with Glencore going down, jeepers, that's a big story.
I think Generalizing about mining, it will be wrong because the other commodities doing well. Check out what happened to manganese. Look what happened to the palladium and rhodium prices. So I think it's a question of what minerals are you exposed to.
Yeah. All right. Well, Glencore Xstrata going down 2.8% thus far on the day, 40 rand and 90 cents for a share. Let's talk then about Impact as well. The packaging company, the biggest in South Africa, continuously struggling there. They've tried to find other ways, and of course with things like delivering packages over the internet and the likes, that has certainly played into their business model. A slight pickup then in earnings.
By all means, but what do you pack if the economy is not growing? So hence the guys will struggle. But I think they're starting to make serious inroads when it comes to the citrus sector, because at least there's some pickup from that side, the fruit and veg as well, they're doing as well. But I think this whole thing of them having that capital investment helped them, and Impact acknowledge that economic conditions will continue to be as bad as they are. But I think for them to come with this whole capital investment program managed to help them, because they're trying to do things in a more efficient way. Like you said, delivering all those packages through internet. So stuff like that will help them going forward. And it was good for them to even increase the dividends, interim dividends.
Yeah. Worried at all about the oil price? Currently sitting below $60 a barrel? That should be a good
I'm
mark.
a happy chappy, given what is happening with the rand.
Yeah, we all should be happy with that. Well, an 8% uptick then in Impact's price, considering its state of earnings. Makwe, appreciate the time. Thank you so much for it. Makwe Masilela there from Makwe Fund Managers joining us here in studio. Well, from me, that is where the buck stops this afternoon. A whole lot more news. Of course, we'll continue to check out that rand and see exactly where does it stand. Currently still at 13.85 against that US dollar, and a positive tilt there for the all share.